When conflict breaks out, most people freeze. The headlines scream panic. Social media lights up in red, and investors rush to sell. But here's what you weren't told. Buried beneath the chaos, Bitcoin often moves with stunning precision, not in response to war itself, but to something far more powerful. What if I told you the next time when the world panics, you could actually profit? Not by guessing, but by understanding the patterns that have played out already over and over again. This presentation will not just show you how Bitcoin reacts to war. I'll reveal what actually moves it and how you can stay ahead of the next crisis. So in this presentation, we dig into the topic of Bitcoin in times of war. Should you buy? Should you sell? Should you panic? This is the full playbook for you. We will discuss how you can react to global conflict, and we will look at the data range from 2019 to 2025. This isn't theory. It's not just trend lines or another war chart. What you're going to see is a decade of conflict and the data-backed record how Bitcoin danced through the shock, the dip, and the recovery. From the Ukraine to Iran, from missiles to market crash. One thing stays consistent. Bitcoin always told the truth before headlines did. This is your chance to decode the truth. In this presentation, we're going to find out how Bitcoin reacts to war in a short-term time frame, in a medium time frame, and in a long time frame. This clarifies what moves have actually been caused by war or the halving cycle or any other event going on. You will get strategic insights, so as an investor you can navigate the market. You're probably asking the same question as thousands of investors at the moment. Should I sell during war, or is Bitcoin still safe in global crisis? But the real question is not really if Bitcoin drops during the war. The question is, what is happening in the background? Is it an ETF cycle? Is it a halving cycle? Or is it a macro pivot? If you're only looking at conflict, you're missing the large chessboard. This presentation gives you the full picture. I have collected all the data of the latest wars in this table, and we go through it one by one now. In this table, we can see all the conflicts on the left side. We can see the date, and the first column is actually what happened 7 days before the outbreak of the conflict. So if we look at the Russia-Ukraine crisis, we see in February 2022, there was an outbreak, and 7 days before the outbreak, there was a drawdown of 21.4%. It was driven by war panic, and after 7 days, we have been up 16% already. After 30 days, 29%. After 90 days, minus 13%. And then after 365 days, 46.6%. But was this caused by the war? Probably not, because we have been in the bear market onset. So it's very important to also analyze everything else that is going on. Looking at the halving cycle, looking at other important things that are playing a role is very, very important. Then we had the Israel-Hamas conflict in October of 2023. We have 7 days before the outbreak, plus 0.6, and the ETF was actually building up at this time. It's also very important to know. About 7 days into the conflict, we have a plus 0.3. After 30 days, 10%. After 90 days, I think this is a mistake, should be 58%. And then after 365 days, we have 122.4%. And why is this happening? I think this conflict was much too little to have some kind of impact. But we have been in the pre-bull ETF hype. This is very important to know. Then we have the latest Israel Iran-US conflict, which is just happening some days ago. 7 days before everything really started, we had a drawdown of minus 6.9%. It's geo-fear. Now at the moment, we don't really know what's going on. Will the US continue? Will Iran strike back and so on? We don't know at the moment. Now, 7 days later, we have around 0.9%. The 30-day level is seen on a broader level when actually Israel started the impact on Iran and the first things have been going on. From that time, we already have a plus of 2.4%. We don't know any data from the 90-day and we don't know any data, of course, from the 365 days. But we are in a major bull market now. The bull market should come to an end at the end of the year or at the beginning of the next year if you look at the halving cycle and what is going on. Also M2 money supply. Then we had also a smaller crisis, Taiwan and China 2024. As you see, it didn't really have an impact and you can't really say this is because of the crisis. It was also ETF, a buzz, and then also we are in an early bull post-halving cycle. So this was clearly the reason for that. Then if we look at Taiwan, China 25, we see almost the same. So we can't really take this too serious. These are two small conflicts. Also the Turkey-Syria conflict does not really have a war impact itself. Now you saw some of the main data, and in the next charts you will really see the long-term, middle and long-term impact I have calculated for you in very clear charts. This was one table, 6 wars, 8 years price data. This might be the most overlooked map in crypto. You see sharp drops, explosive roundups, and most importantly, clues about what drives Bitcoin beyond the fear. Halving cycles, ETF waves, and institutional timing. The table's clear. The patterns aren't random. Let's break it down. Let's now analyze the immediate impact after 7 days. We have the Russia-Ukraine drop. We had minus 21.4%. We had the second round Russia-Ukraine rebound with plus 16%. And we have an average initial drop of minus 2.6%. The key insights of that is Bitcoin bounces quickly after panic selling. Most conflicts show neutral to positive impact on a longer time frame. The Russia-Ukraine war was an outlier with several initial shocks, yet recovered 75% of losses within a week. So everybody wants to know, how does Bitcoin react when a crisis hits? And the answer, fast, violent, and often misleading. Panic-driven dips can recover in days. Some crashes are real. Some are emotional overreactions. This 7-day window is where weak hands sell and smart money positions. When we look now at this 30-day outlook overview, we can actually see by hovering over here that after 30 days in the Ukraine-Russia crisis, we are up 29.3%. If we look at Israel-Hamas, we see that we are up after 30 days 10.4%. In the Israel-Iran crisis, we see that we are also up here 2.4%. The same here, Taiwan-China, after 30 days, 3.1%. Taiwan-China, the second iteration, up 26.2%. And also Turkey-Syria, up 8.1% after 30 days. As discussed, a lot of these ups and downs are also very related to a cycle or to the recent ETF hypes. So looking at this, what if you would not even have to guess? What if after these 30 days you could see already if this is a buying opportunity or a black hole? In 5 out of 6 cases, Bitcoin actually climbed after the war began. But this is not optimism. It is pattern recognition. The market does not wait for peace. It repositions during fear. And that's your signal. On this slide, you see 2 opposite cases. First of all, This is after 90 days again. And we have the Israel-Hamas, which went up 58%. But this was not mainly because of the war. It was because of the ETF approval. And on the other side, we have Russian-Ukraine minus 13.6% after 90 days. Broad bear market conditions manifesting the negative impact of the war. You see, it really also depends on the state of the market when the war is starting. And here is where things split wide open. After 90 days, Bitcoin stops reacting to the war and starts revealing in what cycle it is in. As we have seen in one scenario, you get 58% growth. In another one, minus 13%. Same headlines, very different outcome. This is where smart investors stop watching the news and start watching the narrative. Because 12 months later, nobody's talking about the conflict anymore. But your portfolio remembers. What made the difference? Not the number of missiles fired, not the duration of the war. The key factor was if Bitcoin was entering a bull cycle or exiting one. This is the true macro lens you need. Let's break it down to the conflict locations. We see the Eastern European impact of the war between the Ukraine and Russia had the most impact. The Middle East conflicts till now didn't have so much impact, and the Asian conflicts that have been also much smaller didn't have any impact at all. Not all wars shake the market the same way, because we always have this gold, Bitcoin, dollar debate. Let's have a look at the facts. Gold usually goes up in a conflict. We have about 1.8% on average going up in a conflict. The US dollar keeps normally quite stable with 0.9. We're not talking about inflation, we're just talking about the US index. And Bitcoin goes up 8.2% 30 days after the start of a crisis. Safe haven status. Bitcoin still behaves like a risk asset sometimes, as you know. Higher volatility than traditional safe havens. Trending towards maturity with each cycle. So gold rises? Yes, that's what safe haven assets are doing in crisis. But Bitcoin, sometimes it dumps, sometimes it pumps. Is it digital gold or a tech stock or something entirely new? The following data reveals the truth about Bitcoin's evolving identity and how close it really is to become the safe haven some people say it is. Let's have a look at some strategic advice. What would be a good strategy to get into the market? Short term, preset buy orders at -10 to -20 below market to get into the market when it dumps. Trade flash dips during impact panic. Expect volatility from 7 to 14 days. In the medium term, focus on macro and also on ETF flows, not the headlines. Look for the 30-day recovery because we have this in most of the scenarios. Monitor institutional sentiment shifts. And in the long term, ride halving waves, not conflict news. Use the 90-day plus macro performance as indicator. Conflicts create opportunities, not trends. So what do you do when the next crisis hits? Do you sell? Do you hold? Do you buy more? Here is where data becomes action. Because in crypto, your edge is not just knowledge, it is preparation. Let's now look at the conclusion. Bitcoin doesn't fear war. It mirrors the market behind it. War causes waves, but Bitcoin's tide comes from elsewhere. Geopolitical events create short-term volatility, but rarely changes long-term trajectory. Understand the patterns. Halving cycles and institutional adoption drive macro moves. If there's one thing that the data proves, it is this. War may shake the world, but it rarely breaks Bitcoin. In fact, these shocks often reveal how mature this asset has become and how predictable it can be if you know what to track. When others see chaos, you see cycles. When they react with fear, you act with strategy. That's the real power of understanding Bitcoin in times of war. If this gave you clarity, you've only scratched the surface. Head over to Block 7 to access more free crypto insights, expert-led online courses, and one-on-one consulting to level up your investment strategy. Don't forget to subscribe. I hope you enjoyed the video, and I see you in my next video. Take care. Bye-bye.